Hi, everyone. Cameron from Independent Wealth Partners here with Chris and Andrew. We thought today we might run you through last night's budget, which we've tentatively titled Don't Rock the Boat Budget 2022-23. What do you think, guys?
Pretty nondescript, really. I think Don't Rock the Boat's pretty apt. There's nothing really in this. Well, there is, but comparatively to budgets of the last 5 or 10 years, it's very tame.
Yeah, very tame, isn't it?
Yeah, we had that big one back in, was that 2017 when all those superannuation rules changed?
Correct.
16, yep. 17? Yeah.
Yeah, 17.
That was a big one. But no, this one's pretty nondescript, as we said. So look, I guess we thought what we might do is just run through more of the pertinent points around this budget, and then I suppose from there we'll just talk through, I guess, some of the issues, some of the things we need to be aware of, and then we'll take you through those individually as part of the review process. So shall we scroll down? We'll send all of this out to you guys. So when you get a chance to read through it, if there's anything there for you that you want to call out to us, then obviously let us know. But I guess first we might start with what we've titled for you and your family. So one of the big ones, which we're all going to feel at the petrol pump, is for the next 6 months at least, applying from today. The government's going to reduce the customs duty rate on petrol and diesel by 50%. So that's currently, and this was news to me because I'd forgotten how much it actually was, that was currently at 44 cents, and that's going to be reduced by 50% to 22 cents on the dollar. So what's petrol at the moment? Diesel, I think it's $2.20 or something?
Well, that's what it was yesterday when I filled up. So I'm pretty sure there's a website out there where you can go and have a look and find out what petrol prices are currently. Right. It'd be interesting to see if it took effect from last night. It should be showing up in the Bowser prices this morning.
I think there was a little excerpt as part of this where they said we won't see a reduction for a couple of weeks because the petrol companies it'll take a couple of weeks for all the existing fuel they've already paid for to make their way out of the Bowser. So give it a couple of weeks, but no, we'll happily accept a reduction in petrol prices. So that's a good one. And, clearly the idea there is that it's pretty good for the economy as we work our way through that. The other one, which is supposed to be like a little booster hit to the economy, was the increase in what's called the low and middle income tax offset. So for an individual that earns up to $126,000, that's currently $1,080 a year. Going forward, that's going to be increased by $420. So we're looking at that being about $1,500 for the year. So that's an extra tax hit, not a hit, sorry, ends up in your pocket. I suppose though that, am I right in thinking, guys, that only comes through once you do your tax return?
Yeah, correct.
That's
absolutely
correct.
Yep.
So we need to make sure we get our tax returns done early for next year to get that one.
Yep.
The other little sugar hit, I suppose, is the $250 cost of living payment. So that is going to be paid automatically, I believe, from next fortnight. For anyone in receipt of any one of these. So age pension, disability support pension, parenting payment, concession card holders as well, pensioner concession card holders, and Commonwealth Seniors Healthcare card. I'm not in receipt of any of those, but if I was, what would you spend the $250 on?
Petrol.
Petrol.
A tank of petrol.
Yeah. Well, that's right. Okay, shouldn't laugh too much about that. But no, look, that'll be good. That'll be good to have that in your pockets. The other one to work through is a change in the home guarantee scheme. So that's actually been extended. So look, essentially what this is when you first go to buy a home, in the past, prior to, this was last year's budget, prior to last year's budget, you went to the bank and you said, well, you'll lend us some money, and maybe you're buying a $500,000 property and you had a $25,000 deposit. In that instance, you used to have to pay what's called lender's mortgage insurance, which used to be an additional cost, or quite significant costs. You know, in that example, sometimes up to sort of $10,000, $15,000. But from last year's budget and now extended through this year's budget with more guarantees on offer, is the fact that the government's going to step in there and provide the guarantee instead of the insurance company providing the guarantee. So you can see the first home guarantee from 1 July 2022, that's going to increase from 10,000 to 35,000 guarantees, which is, you know, obviously great. There's a single parent family home guarantee where there'll be 5,000 guarantees each year for the next 3 years. Getting into the housing market with a deposit of as little as 2%. And then in addition to that, and this one's new, there's the introduction of the regional home guarantee, which I guess will support anyone who wants to purchase or construct a new home in regional areas.
Yep. I think one of the important things to consider here for clients is that it's a guarantee in terms of government providing guarantee for the remainder of the deposit, which is almost like an interest-free loan in a sense. But the important thing to realise here is that if you do sell the property in the future, you don't just get to, like in that single parent family home guarantee option where you're putting in 2% and then let's say the government's putting in the last 18. You don't get to keep the 18% that the government's put in. They will want that back, in the sense of 18% of whatever the property rise goes up to. So I think for the vast majority of people that this is going to be relevant to is probably kids or grandkids of existing clients. I just think it's something to consider when you're talking to those relevant people in your lives, that that's how it works. But obviously, just seeing out if you've got any questions.
Cool. All right, let's scroll through. All right, so there was some changes to super, and I guess we'd probably say fairly good changes.
Yeah, I like this one.
Yeah, same. So look, the when you draw down a pension income from superannuation or an account-based pension or a similar product, for the last couple of years post-COVID, there's been a reduction, a 50% reduction in how much you have to draw down. So, for example, if you're 65 years of age and this wasn't applicable, then you're looking at a drawdown rate of 5%. Going forward, that drawdown rate's going to be extended for another year, the 22-23 income year, to only 2.5%. So it just allows you to keep more money in superannuation or in account-based pension, if that's the product that you're using, for a bit longer. So, notwithstanding the fact that you might need it and you might want to spend it because petrol prices are going up, you have the opportunity not to take it. So I think that's pretty important, and of course that's something we'll be chatting to you individually about as we go.
Yep. Smart decision, I think, just given what's going on. Sorry, Andrew.
No, I was just agreeing, absolutely.
Yeah. Especially considering what's happening investment market wise now with the Ukrainian-Russian war. I think it'll give people a lot of sense of comfort to know that there's no obligation to be pulling down a sizable or a doubling essentially of what we've seen over the last 2 financial years. So I think that was a good extension.
Yeah, agreed. All right, that's a pretty simple one. Okay, so moving on to businesses and employers. This was interesting. So if you spend $100 on technology, it's not really clear for me what that means yet, but let's call it technology, then you actually will get a $120 tax deduction. So that's essentially 120% tax deduction on expenditure, which is related to anything to do with technology within your business.
Yep.
So you think about that, Microsoft Cloud subscriptions, cybersecurity systems, portable payment devices,
Yep.
Big screen TVs.
I don't know that would fit under the guise of maybe the subscription services that feed into those TVs.
Netflix. I set a really good password on my Netflix, $16 a month subscription, so that I can make sure that I can deduct my big screen TV. No, perhaps not. I'm having a little joke there for those of you who don't understand my humour. Yeah, so look, I mean, that's kind of interesting. It's probably it's a good thing to sell to those business owners out there to try and get their vote. Oh, hang on, did I say that out loud? So no, I think that was okay. Yeah, any other comments there?
No, not really. I think the only thing for the small business owners out there who are listening to this is the expenditure that you make this financial year will be claimed next financial year. And the expenditure that you make next financial year will be claimed next financial year. So in the year you spend it. So it's effectively, I guess, if you're doing some creative tax planning in this respect, you might be able to increase your deductions for next financial year by making some expenses this. But yeah, obviously that's worth a discussion on a case-by-case basis.
Yep. And there is a cap of $100,000 as well.
Yep.
So that's worth understanding. I'm not sure if that's be interesting to know, and we'll have to have a look at this. It won't be clear yet in the budget papers whether that cap is actually to the boost amount, or that is
interesting, or the deductible amount. Yeah.
Yep.
I was wondering that.
Yeah. All right. Very good. That's a good one. So there was also there was a broadening of the employee share scheme rules. Wasn't clear enough for me in the budget papers what this one actually meant. You guys want to shed any light on that? I think it was just around. There's a bit of detail here, and interestingly enough, if any amount could be flagged if you were going to take advantage of the planned sale listing of a company. So any amount could be offered to any employees if the plan was to take advantage of that. But typically it's $30,000 per participant per year. Yeah. Anyone want to add anything to this one?
No, I've got nothing to add there, Cam.
Sure.
Yeah, no, I agree with you, Cam. I think the headline parts of this seemed good, but as with anything that's employee share scheme related, the devil is really in the detail. So
that's right.
Well, I guess hold fire on that one, but I guess it's something for those who are getting employee share scheme offers in the near future, that it's something we should overlay as part of the regular tax discussion.
If you received any COVID-19 grants, government grants, I think the government's just set out here, the federal government, that it should be treated as non-assessable, non-exempting, which I think was pretty important too, because I know in the past some of those grants are fully taxable grants, which means some instances are worth less, 30% less than what they're actually granted for.
Yep.
So that's a good one as well.
Yeah.
All those COVID-19 tests we've done, all those rat tests we've done. Hope you kept your receipts because they're now tax deductible. From 1 July 21.
Especially when they were $50 a test.
Yeah, that's right. Yeah, there was that period.
I'm sure there's
Oh, go ahead.
Sorry, I was just going to say there was a while there where some companies were having to fork out a fair bit because there were mandated test requirements and tests were quite expensive. So I'm sure some of that will be relief for those businesses, but I'm sure for the rest of us individuals who were just shelling out the money because we needed to, if you could get your hands on one. Bit sore, another sore spot.
Anyway, we might have to have a look at that one. I know there was a couple of times there where I found it really difficult to get rat tests, and so walked into the local pharmacy and for whatever reason they had them, and so I just bought like 4 boxes of rat tests. And it was like 20 rat tests, $200. But no, I didn't get a receipt. Anyway.
No.
And then you started getting some from the school, Cam, did you?
Yes, that's right.
Stockpile.
I got it from the school. It was okay. That's right. All right. Education, skills and training. So look, again, this 120% tax deduction is a bit of a new thing. We haven't seen that from federal government budgets before. 120% tax deduction for money that's spent on skills and training. So that, to my mind, is actually relevant to small businesses. It's not relevant for individuals. So, and importantly, I believe there's going to have to be some sort of test around an external training course as opposed to an internal training course where there's cost.
Yep.
Correct.
So, I think that's pretty positive, I think, just in terms of upskilling Australia's workforce. Seems like a nice thing to do. Probably really isn't going to cost the government that much money, I wouldn't have thought.
No.
But
no.
Any other comments there?
No, it's good. Just I would like to see more of this more often. But as we said, this budget's pretty vanilla is probably a good way to describe it. But some's better than nothing, I suppose.
The apprentice wage subsidy, that's been extended. So that actually came about as a result of, I believe that was last year's budget. So there was an opportunity for, going forward now, there's an opportunity for 50% of an Australian apprentices or trainee, I believe, maximum wage to be discounted each year by a payment from the government. So in that instance, the quarterly payment would be $7,000 per quarter. That is subsidised by the Australian government up to a maximum of $7,000 per quarter. I really liked that this time last year when that came out, and I think it's great that they're extending it. Obviously, as small business owners, it's an opportunity to get people into the business if your business is growing at a lower cost, but importantly, it's a lower cost to the business, but not a lower cost to the employee who's doing the work. So
correct.
That's a good one. So it was 50% the first year, and then what do we have after that, Andrew? Just can't see that there at the moment.
10%.
Yeah, 10%
second year.
Yep.
Yeah. And then 5 in the third year.
5 in the third year. Yeah. So it's really about front ending it, I suppose, isn't it? So I thought that was pretty positive. I like that one.
Yeah, well, given the skill shortages we've got at the moment, I think again, more of it would be nice.
Yeah, that's right. So look, that was essentially the main changes, which, to be honest, I'm not sure really. Speaking frankly about it, I think it's probably more of making sure that they get re-elected as opposed to making more significant structural changes over a long period of time. And that's an easy thing to say sitting here, but there wasn't much in it. There wasn't really much change. They've pushed it out to the public as though it's a inflation busting budget, and we're going to fix how things are at the moment, the cost of living increases and that sort of thing. But in reality, it's probably not going to cost them too much money to be able to do that.
No.
The government debt to GDP number at the moment sits at about 23-25%. So they've got lots of room to be able to make these changes. And I think there's a little bit here around the economy that we've put together. So, the unemployment rate in Australia is at 4%. It's the lowest rate in 48 years. And it's continued to go lower. We're looking at September quarter, maybe it'll be 375, or that's what they've suggested as part of their forward earning estimates. And GDP growth is sitting at 4.25%. So the economy's in pretty good shape. The only issue and thing that was just, I suppose, on our agenda and something that we're thinking about constantly is how's inflation looking, and it's expected to rise to be upwards of 4.25% in the June quarter of 2022. Quite clearly an estimate, and hard to predict the future, of course. But it is expected to rise, and so part of what this budget is about is trying to make sure that those cost of living pressures aren't borne as much by the householder.
More money in people's pockets, hopefully. Just be interesting to see whether the fuel excise cut is extended past 6 months, or and obviously depending on what happens with some of the supply chain issues and China's COVID zero policy, whether they change tact on that and what that means for global integration, that sort of thing. So, like any of these forward estimates, it's about, just continuing to check in and make sure that we haven't just pinned a number on it now and taken our eyes off the road.
Yeah, I think that's fair. All right. So, look, that's our view of the budget. Is there anything else that we want to add here? Chris, Andrew?
Oh, you've covered it in the article, but I think just the reduction in the deficit, the forward deficit that had been previously projected in the previous budget and recent forecasts and outlooks as well. So that's I guess that's good news, that the deficit is not projecting as high as what it had been planned previously.
Yeah. Yeah, I mean, if that is the case.
Yeah, that's right.
I think it's always politically, it's, how do I say this without, it's politically ingenious to see a reduction in a deficit over time, because a deficit sounds horrible. No, I think just on deficits, I do think that governments are required to spend at points in time, which is what they've had to do in part to get us out of COVID. And then also back in 2008, when the GFC occurred, we needed to spend. And so subsequently there's deficits that occur, and that's okay. That's okay. So, what we don't want to see is, government deficits running up to where Japan's is, or government debt to GDP running up to where Japan's is, which I think it's around about 290 or 300%, something like that. That's a little bit too high. In Australia, it sits at about 23, 25. So,
well, it makes it hard for the national income to repay that debt. So, but I guess the only caveat that I'd put on all of this is we've got an election within the next 4 weeks. So we'll see what happens.
Hasn't been called yet.
I was expecting it to be called last night, actually, as part of the budget announcement. But yeah, look, I think within the next week or two we'll know. All of this is, for me, up in the air, given what happens on election night, I suppose, because I feel like if there's a change in power, we're probably going to see some change in policy, I suppose, on this front that isn't necessarily linked to budget night.
Yeah, fair call. All right. It's been good. I've enjoyed this. If you made it to the end of it, thanks for listening to all of us. And if you did make it to the end of it, send us an email and confirm. We'll see how many emails we get. All right. Good on you guys. I'll catch up soon. I'll see you in the office tomorrow.
Thanks, everyone.
Bye. Bye-bye.